North American markets in the red to start the week. Investors on the sidelines maybe waiting for central bank announcements that come on Wednesday. Let's go to Scott Ladner, Chief Investment Officer at Horizon. He joins us now. Scott, thanks for joining us today. So year-end volatility is what we seem to be seeing. What do you think is driving that?
Hey, Marilla, thanks for having me. Look, as far as the year-end volatility, it's just people trying to get positioned and set up for next year. There's a pretty popular trade setup going on right now. It feels like people are trying to kind of get out of some of the Mag 7 names, kind of get out of the AI, like the semi kind of names, and get more into a broadening type of trade. Think cyclicals in the U.S., oil companies in Canada, things like that, which we think actually have a pretty good shot to perform well next year.
Okay, so is some of this, you think, just rebalancing for the tax year?
Yeah, probably a little bit of that, but it probably, frankly, it's just a little bit more of sort of repositioning portfolios and getting out of the winners from this year and getting into what you think are going to be the winners for next year. You're not seeing a very high volatility at the sort of index level, but you are seeing quite a lot of volatility inside the market. So that the volatility of individual stocks and sectors is rather high. While volatility at the index level is somewhat muted right now.
All right. You've mentioned the tailwinds for the markets, like the bank decisions, but some of that's already priced in. So when you take a look at it, how much of it is priced in?
Actually, we don't think very much is priced in so far, Marilla. It is, this is a Trump administration that has not done, frankly, very much on the regulatory front thus far. We think that they're taking a friendly stance on some things, but they haven't really done very much in terms of easing regulations, in terms of really signaling to some of these medium and larger sized banks that easier times are going to come. So we actually think there's quite a lot of tailwind in for next year as it becomes fairly clear that the focus for the administration is going to shift from the tariff policy and from some of those industrial policies more towards a friendly regulatory regime. We think it just really hasn't been a focus for the Trump administration in year one, but we think it will be in year two.
Some of that will come through the One Big Beautiful Bill, of course. How strong of a tailwind do you see from that, and anything specific from that you see working out in favor of the markets?
Yeah, really, I think that the one big thing out of that bill is the full expensing of capex, expenditures for U.S. domiciled companies. This could be a rather massive and really underappreciated, we think, thus far, tailwind for U.S. for basically large scale corporates or large cap corporates. You're talking about if people really take advantage of this, if companies really take advantage of this, you can see effective tax rates in the United States be 11-12%. We haven't seen that kind of level of effective tax rates in this country for 50 or 60 years. And we don't think that is really in the price just yet.
Okay, let's talk about AI a little bit more, because you mentioned there's rotation sort of out of some of the AI winners to date and more into sort of cyclical kind of stocks or companies. Where do you see the AI trade moving to for the start of the next year?
Yeah, look, we do think that we're going to be moving out of this place where chips, semiconductor chips are really the way to play AI in 2025 and in 2024, really. We think in 2026, the way to play AI is going to be more from an infrastructure standpoint, more from a power delivery standpoint, because 2026 and 2027 are going to be the years where AI has to diffuse through the entire economy, not just in the U.S., but globally. And in order for AI to actually diffuse through an economy, you got to be able to deliver it. You got to be able to generate the power and the infrastructure necessary to actually run these models at scale across a large section of organizations. And so that's like that to us is probably the more interesting play between the infrastructure stuff and industrials and some of the the pharma and healthcare names that we think could be some of the first beneficiaries of drug discovery advancements.
Yeah, let's talk about that a little bit more, because on the energy play, we've already seen some stakes go in for that, but you think there's much more to come.
Yeah, we do, because it wasn't really like demand for AI. AI power generation has been something people have been looking for, but we haven't really seen it that much yet. I mean, it's impacted energy demand thus far a little bit in this country. It has not been really large scale though yet. As we kind of move into the place where AI goes from something that's more of an idea and really something pretty cool to play with, something that's integral towards the running of businesses large scale across the economy, you're going to see those energy demands really start to pick up, and that's when we're going to see some of this we think really start hitting the equity prices and the equity values of some of these companies.
Some of that would also be construction plays.
Construction, certainly. I mean, look, we got to build a lot of stuff. Not only on the energy infrastructure, but just the structure of like all sorts of manufacturing things, both here and in Canada, are actually they're pretty old. And so and with the incentive structures in place from the big beautiful bill, in terms of being able to expense those things immediately, you're going to see a pretty big tailwind, we think, towards just replacing of structures in the manufacturing side and towards building new energy generating types of structures, especially in the U.S.
Okay, you talked about this, or you touched on this, fact that AI has to now sort of filter through to the rest of the economy, and there has to be some sort of return on revenue for those investments. Pharma is something we expected, healthcare, medical, pharma, we expected to see some strength there already from AI, but that really hasn't happened yet.
No, it hasn't. That's well pointed out, Marilla. Look, this is this is a space where we're excited by it. I mean, if when you think about some of the things that AI might be able to do in terms of speeding drug discovery, new drug discovery or testing procedures, analysis of data, those types of things. We think this is one of those potential, it's sort of potential energy type kind of thing, but we're not seeing that potential energy turning into any sort of kinetic money just yet. We're not seeing any evidence of kind of large scale drug enhancement or large scale, like drug development enhancement procedures. And that's, we think we're going to see that this year, but we need to start seeing it actually before we're going to really start putting our money there.
Got it. All right. Scott Ladner, I'm going to leave it there with you, sir, but thank you for your time. Scott, Chief Investment Officer at Horizon.